set. All engines go. Welcome to the angle. Let's start the show. Hold on tight. The stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle. No time to delay. Markets rise and markets fall. Atomcash is ready to answer the call. While the bulls charge hard and the bears dig deep, the angle will keep you on your feet. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay. Cashing in on the highs and lows where the wind of fortune constantly blows. No looking back, keep your eyes on the prize. Fuel to run with a fire that never dies. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay.
Good morning, everyone, and welcome to the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Atomcash, and I'm bringing you the firepower that your financial life may or may not have been missing. Now, whether you are new to trading or a trading savant, I aim to turn complexity into clarity with a shot of adrenaline. Now, today we have some calmer segments to go over with you guys. As per usual, we're going to do some live trading and market analysis right here at the market open. And then we're going to do a segment called the week ahead. So we look ahead on price action, we look ahead at any catalysts throughout the week, and kind of give you a plan to tackle this week. Coming off of last week with the holiday and everything, I thought this would be a good segment to start the week off strong. And if you aren't aware, we're going to do a show today, tomorrow, and Wednesday, back to back to back. Just to get you guys guided through the week. Tomorrow we're going to do a segment on options operations, so that's more of a risk management kind of segment. And then Wednesday, make sure you tune up to that show as well. We're going to do raccoon trades. So I find some undervalued stocks you may or may not have heard of, whether financially or technically undervalued. And I shouldn't say financially, I should say fundamentally undervalued. Bring them to you guys and explain why I am very interested in those names. So that will be on Wednesday. So we got a chock full week for you guys to have a lot of good, very good information, I think, that we're going to have this week. Now, looking at the market right now, we're down a little bit here in pre-market. A devastating, we are just crushed right now, down 2 points off of a insane last 2 weeks on the overall market. Now, if we look at the daily candles here, and let me get rid of my doodles here so you guys can see a little bit clearer. We had 1, 2, 3, 4, 5, 6 green candles in a row. Kind of a low volume melt up, but keep in mind that we had that holiday. So obviously we had a half day last Thursday, and then Wednesday was a little lower volume as well, as we talked about on this show. So seeing lower volume the last 2 days isn't really shocking, probably just a lot of computers trading back and forth. But nevertheless, we made a new all-time high again on last Thursday. Looking at the chart right now, or looking at SPY right now, we retested this POC back on the 20th, had a nice little bounce here and just rallied up through then. So very, very, very strong move here on SPY as of right now. Now, I might have said this, I don't know if I said this over at your community in exclusive trading or if I mentioned it here on the program, but I was ideally looking for some level of consolidation or pullback last week. I did not get that. Instead, I got a rocket. Every single day we went up on the market, which I'm not complaining about. My long equity did great, but I would have preferred that we came back and back tested those old all-time highs, which is still what I'm going to be looking for this week. Now, that being said, like I said, these weekly candles are pretty strong, so we're going to see how today turns out heading into this week. And we're already starting the month off pretty strong after the last 2 monthly candles here. Very solid closes and getting off, like I said, to a pretty decent start here. That monthly SAR broke as we talked 70 to 100 points on the market. Part of why I'm saying SPY to 700 by the end of the year. Again, part of the reason, and if you don't know what I'm talking about, you can go back and watch the other streams where I talk about other factors to look at. But that's part of the reason. We also have your MACD curling up here. You're showing good bullish momentum here on RSI as well for the SPY on the monthly. So the monthly outlook is still looking really solid here on SPY. But again, for me, before I do, as I like to say, go super long, I would prefer to see some cool down here, prefer to back test those old all-time highs and then establish a longer term position. So I'm looking at that 613.23 level, coming back there, kind of floating around there for a few days, maybe even a week, before opening some more swing longs, again, looking more longer term. In a perfect world, I'd look for that to come down, sit there. So we're talking about another 10 points lower than where we are right now. Sit there for about the week, just kind of like mellow out a little bit. And then from there, look for not necessarily leaps, but some longer term options, even some spreads for the overall market, because I want that IV to cool, come down a little bit before those longer term options are very attractive at that point if we go nowhere. Right now, they're a little hot. So that's my point of view on the market. Now, I don't want that to be misconstrued as bearish by any means, because it's not. It's very bullish on the market. It's just a matter of waiting to get into that position. It is also a sweltering 92 degrees here in New York, which is just a little absurd for New York. We've got a whole heat wave coming through the state. Not that you asked or cared, but my air conditioning cannot keep up, thus me still in my gym clothes. So deal with it. Anyway, we're going to look at the market, but I do want to look at our catalyst watch for the day, and we'll go over the other catalysts for the rest of the week later on, because that will give... we'll do that in the week ahead segment, so that way you guys know what to look for at that point in time. But looking at our catalysts through the day, a pretty quiet day overall, at least in terms of expected catalysts. We have Trump's going to sign some executive orders at 4 o'clock, so that could affect you overnight if you're swinging something, so just be mindful of that. But outside of that, we really don't have much going on. You have the 6-month and the 3-month bill today, but those, because they're so short, don't typically affect the market, so I wouldn't be too worried about that. The only other thing I'd say to keep an eye on right now is that Trump's trade advisor is speaking right now, which wasn't on the docket for the day, but he's speaking right now. And the Iranian president made some comments a little earlier, right around 9 o'clock, but the market doesn't seem to care too much about those. So if you want to stuff those in the back of your head just in case something happens, not a bad idea. But overall, looking like a quiet day for the market, which is what we kind of want to see coming off of that holiday, right? So we're coming off that holiday, we're coming off that lighter volume. We should see a good chunk of volume coming into the market today. Now, with that being said, I would be very careful at this market open. You guys will hear me say, typically on Mondays, I tend to take it very, very slow. On Mondays, especially on a holiday where we had 3.5 days of the market being closed. And I don't know if you guys were aware, there's a lot of trade drama going on with we're extending the deadline, and then we're going to be negotiating, and now we're going to implement tariffs. And like I said earlier, the market's getting less sensitive to these things. It doesn't care as much. However, that is still information that is yet to be disseminated on the market right now. Now, obviously, futures has exposure to that, but for the overall equity market, we're not open until in the next 5 minutes. So especially with all that information coming out, you have 3.5 days of news that needs to be digested by the equity market. I'd be very careful here at the open. I don't know if we'll see an IV pop on our 0-day option, so we'll check that at the open. But I do think we would see a more volatile open as we see some repositioning. We already see some movement here in pre-market. Like I said, we're down about 2 points here. A bit of a rocky pre-market. We gapped down, we moved higher. Now we're back somewhere in like a 50% retracement roughly of that gap down in those highs. So opening, I would say pretty flat, all things considered. Coming off the holiday high, gapping down and rallying about $2. like I said, we're right in the middle there, so it makes sense to be sitting around here. I'd watch your pre-market high and your pre-market low at the open just to see how volume reacts there and kind of go from there. But outside of that, I wouldn't be an open I would personally rush, especially on Mondays. Mondays, I tend to wait for the first 15 minutes unless something looks really, really, really good for you day traders out there. I think it's important because you have a lot, like I just said, a lot of, especially on a longer weekend, a lot of information that people are digesting. A lot of people obviously trade pre-market, but when the market actually opens, we see a lot of repositioning, we see a lot of volume come through, and you could have a really bad time if you decide to play options that time for one of two reasons. One, the volatility tends to be higher, so you have a harder time executing your trade or your trade plan, for example. But two, you might have a really hard time with maybe being correct, but not being correct with your math. Meaning, for those of you that don't know how to really calculate your Greeks on your options contracts, or even looking at IV in general, if you buy a high IV contract and let's say you buy calls and the market goes up, you could still lose money because IV can get crushed. So that's the kind of thing you want to keep in mind. That's why on a Monday specifically, I tend to go much, much slower. Again, unless there's something that looks really, really good, I would tend to take it easy on a Monday open. With that being said, SPY right now is down again, 0.33%. Q's down a little bit more, and IWM lagging, so we're seeing a lot of bearishness, at least on the day so far, come through on our small caps. Now looking at our Mag 6, we saw a lot of drama. We'll start with Tesla here. A lot of drama coming through with Tesla and Donald Trump and Elon Musk, all this stuff about the bill passing, then Elon's forming this political party, or has officially formed it, called the America First Party. Consequently, that is a bearish effect on Tesla because they don't want their CEO distracted doing political BS, right? I wouldn't want that as a shareholder either, which is why I've said on this program before, I am not interested in a long on Tesla at all, sub 360 unless I'm day trading, or where I get interested on a long on Tesla is somewhere down here. Like 212 to 217 and maybe 244 if I'm feeling a little froggy. I'm not interested in a long, we're talking long shares investment. I'm not interested at all until we get down here and we see some bulls step in. I believe, what was that long term? The all-time POC is 206.94. So that's in the history of Tesla. 206.94 is your all-time POC. If you want to zoom in a little bit more, just on like more recent price action. So if we're considering, right around here. So 2013, October of 2013 to today, 212.64. Which I believe I have a line there. Yep, I have a line there, 212.64. So there's a lot of volume down there in the low 200s. So if you like Tesla as an investor, right? We're not talking about day trading. We're talking about as an investor. That would be the area you want to wait for and watch for. And again, very volatile stock, very volatile name. Day traders, ignore that because you're going to trade your chart every single day with Tesla. Do your thing. But especially with this new bear catalyst coming through on Tesla, I believe investors, if you're patient, you could have an opportunity to pick up some discounted shares of Tesla. You're talking about like a 20 to 30% markdown off of Thursday's close. So pretty cheap shares here if you get back down to that lower 200 area. So keep an eye on that if that interests you. Real quick before the market opens, we have 1 minute to go before the market opens. If you haven't already, please do me a favor, like the stream, share it wherever you are, drop a comment, interact some way, somehow. It helps me very much. I very much appreciate you guys watching right now. If you like me to do more of this content, your interactions mean everything because it helps me in the algorithm, and the algorithm pumps out the content to everyone else and everyone wins. So if you appreciate the show, you want me to do more of it, please, please, please do me a quick favor. I only ask you twice a stream. This will be the first time. I'll ask you one more at the end. Please interact with the stream. I know some of you are working. Open up your phone, tap like, whatever, comment real quick. I greatly, greatly appreciate your feedback, your interaction. Okay, market is now open, and we're opening right around that midpoint, that 623 area. And again, the midpoint from the pre-market lows to the pre-market highs. So we'll see how we open up here. Kind of go from there. We'll check out volume as well. Right now on the open, decent volume here on SPY, getting a quick pump off of those pre-market, I don't want to call it lows, pre-market mids, that middle range. So we'll come back to this in a moment. I do want to pop over to our Mag 6, as I like to call them. NVIDIA trying to save the market at the moment, moving up to 158.64. On the open here, that new all-time high is 160.98 as achieved on Thursday. So that's going to be an obvious level you want to keep an eye on today if you are an NVIDIA investor. We did just break the pre-market. Oh, I lied. We did not break the pre-market high in NVIDIA. You're going to want to watch 158.90 if day trading NVIDIA, and you're only about 20% off, or I'm sorry, 20 cents off of that. So you could get a rejection here, but if you pop there with volume, you could get a nice little rally back to all-time highs on NVIDIA today. Apple, big God candle at the open here, rallying about $2 on it. Wow, it's just going. Apple, big push here. We get news on Apple? Big push. Apple securities lawsuit filed against Apple Inc. No real news on Apple, but we're getting a decent push here on the open on Apple. As I mentioned, if that 195.83 was not defended, and if the bears couldn't keep it under that 50 MA, this is a bearish move. And the bears could not keep it under that 50 MA, and as a result, you have a nice little relief rally here. If you're bullish on Apple, you're going to want to watch your 200 MA here. And you do have a lot of confluence up here at 224.37, so that's an LOI I have on my chart, and that 200 MA, which today is trading at 223.08. So if you're a bull on Apple, you're going to watch that range, because right now you got good momentum on Apple. It's pushing up really nicely. You're going to want to watch that range for any potential rejection here on the daily. But other than that, getting over, I mean, we're already over it. I was going to say 214.45. We're already over it. So now you have this gap fill in play here, 221.02. So those are levels to watch on Apple. If you're an Apple investor, 221.02. Then you want to keep an eye on that 200 MA, 223.09, and lastly 224.37. So I would consider that an area of supply. But until then, you got about $4 to the upside here on Apple. Pretty solid. Weekly is looking good, and daily is looking good as well. And monthly is trying to turn it around. So Apple, if it can find strength and continue to find strength, now be mindful you're on 5 days of 5 green candles in a row here. As long as it can crack that 214.45-ish area and hold above it, you could see a nice rally on Apple in general. Microsoft kind of farting around here at the all-time high. Be a little trepidatious on Microsoft. Selling off a little bit here on the open, but nothing too fantastical, just kind of bouncing around. Google, similar story, not much going on here with Google today, pretty flat. Amazon, looking like a similar kind of story. Amazon looking like it could have a very mini flat top breakout. So flat top breakout is one of my favorite technical, I guess it's a pattern. I really hate using patterns, but I guess it is a pattern where you see higher low, and you see basically the top of the range just continue to reject. So you're seeing that right now, 1, 2, 3 taps, even 4 if you want to consider that today, a flat level of resistance there, but you're making continued higher lows. That typically builds up momentum, and typically you get a hard break to the upside. So on the daily chart, this is looking pretty good on Amazon. If the bulls can break that high, that 224.01, you could see a hard push on Amazon on the daily chart. Going to about 228.09-ish. So you got at least $4 there if you break that localized high, which is pretty solid. Let's babysit Tesla a little bit, see where we're sitting there. Ugly open, breaking through my 291.85 LOI on my chart. Now currently trading 290 on Tesla, down $25 from Thursday's close, 8%. Woof. That is not good. We have the green SAR on our daily chart. And for those of you that stayed tuned to that lesson from a while ago about how much I love the SAR indicator, keep an eye on that. 286 is that level on the daily SAR. So keep an eye on that for Tesla. Meaning, even though it's down 8% today, it could possibly get worse. So you're obviously going to see people buying this dip on Tesla. You're going to have a heavy markdown, like I said, but I'm not personally interested on Tesla until we get in that sweet spot in the low 200s. I think if you're patient, you're going to get that. Popping back over to the market, and then we're going to check on the sectors real quick. SPY pretty flat, not much action here at the open. Volume is actually pretty okay. It's actually a little lighter than I thought it would be for the open after the holidays, so we might see a little nervousness coming through the market right now. IWM pretty flat. Qs, I mean, arguably things are just kind of flat right now. UVXY up a little bit. Your VVIX is up. Volatility isn't up that much. It's still pretty flat, sitting around that higher 17 range. Let's check on our sectors and see where the opportunity could lie for the day. Only 2 green. Whoa, we might get a third one here. Sectors right now are real estate and finance, or financials, and not by much on financials, and real estate also not by much. Industrials are trying to turn it around. Let's flip through all these names and see where we could possibly find some strength, if any at all. Utilities are red, energy's red, consumer staples also red, tech is red. But out of, again, we remember when we talk about our three conservative areas, conservative ETFs that are part of the SPY, out of those comparatively to tech, this is what I look at for getting an idea of if there's fear. And right now, I wouldn't say that there's any fear in the market just yet. This looks like profit taking to me after the holiday because we're not seeing a lot of bullishness come through on the XLU, the XLE, or the XLP. And actually, XLK is moving pretty much in sequence with them. They've all moved down at the open, and now they're just kind of like farting around here. So in my opinion, this would be indicative of profit taking after the holiday, which I guess would make sense if, I mean, I would think a lot of people who are like hedge fund managers would be taking their profits pre-market, but maybe they'll wait to the open anyway. Or if they have options, obviously we have a lot of gamma moving around. So we could see that being part of the reason if we're seeing some options profit taking in general, and that could be affecting, obviously, delta and gamma's relationship on a lot of these names, which could cause this. But this is looking like profit taking to me right now, mainly because we look at our XOK for growth to get an idea of growth, and we look at these three on an idea of defensiveness. So if the market was scared, if there was fear, we typically see utilities, energy, and consumer staples pop up, and we typically see tech go down, or at least in recent times. And the fact that they're all down, but like marginally, not really, really, really bad, is indicative, at least to me, that we're seeing some just profit taking as of right now. Because there's no trend here either. If you look at these charts right now, like, yes, they sold off at the open, and they're just kind of dancing around here. But there's no definitive, oh, we're going up, or oh, we're going down. There's no trend. Looking at real estate, there's no trend there either. Materials are down, industrials are flat. It's all similar. Like look at XLV, sell off and then slow grind up, sell off, grind up. Not sell off on XOK. It was the inverse, grind down, sell off, grind up, sell off, grind up. It's all the same movement. So that's why, another reason why I'm thinking this is leaning more towards just profit taking in general. Consumer discretion's hit hard today, but this is obviously where your Tesla is on your Amazon, so a big part of the XLY. So it would make sense that this has a tight noose on it due to Tesla's performance today. And comm services, it's all the same thing. So I would, again, still be careful around this open, but based on what I'm seeing right now, this is looking like a buy the dip environment. So far. So far. Volatility, the way volatility is barely up, the way sectors are just down and kind of grinding back up, the way that we're not seeing the market move too much in either direction really, tells me that we're just seeing profit taking. That's why I say buy the dip environment, because people are just realizing profits, and then the market resumes its trend. In this case, the trend is up. Now, as I've said at the beginning, before the market even opened, I would prefer that the market moved down, and I would prefer that we consolidated, and I would prefer that SPY gets back to 613 at some point and just chopped around there for a few days so I can get super long. But so far, we don't have really much of a catalyst to get there. Apple is under that 214 level. I believe it was 214.45. So if you're a bull, keep an eye on that. Over that 214.45 pushes you into the gap. So that's going to be a very important level on the daily here. NVIDIA rejected underneath that all-time high. But again, not much. It's just not, there's no trend really. In my opinion, with the exception of Tesla, it's a little volatile right now. We're selling off, and we're going to just kind of slowly move back up. Tech is a little iffy, though. I'm looking at these charts, but it's looking like that's what we're going to see on the day here. UVXY, so volatility slowly grinding up here. I don't know why my VIX isn't updating. It's not updating, but we'll look at UVXY for now. Volatility slowly grinding up, but it looks toppy here. Like it looks like volatility wants to come down, wants to cool. Now again, volatility and the market don't necessarily have a one-to-one relationship, but as I will continue to say, and I've said on this program many, many, many times, you understand the relationship volatility has with the market. It gives us an idea on price agreement or disagreement, not necessarily if the market's bullish or bearish or volatile, but do we agree on price? Because that's how the VIX gets its value. VVIX did gap up, but again, not by much. This is a very, 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 very careful open, and I'm glad I gave you guys the warning at the open here not to rush this open either which way, because you more than likely would have got chopped up pretty good if you are buying 0-day options. Let's take a look at our IV on our 0-day options to get an idea of what that's looking like, and we're sitting around 17%, and right now that IV percentile, I guess, is really starting to drop. So that's really a good sign. So if you don't know what IV percentile is, it tells you what percent IV is relative to the last rolling 52 weeks. So if IV is higher or lower relative to the last rolling 52 weeks. Currently, that IV percentile is 45%, which kind of makes a bit of sense because we had the tariff drama and the SPY was getting all wonky, and 0-day IV was crazy. It was 40, 50, 100% at some points. And now we're seeing about, what did I say, 17% here at the money, 16 depending on what you're looking at, what strike. And you're seeing that IV percentile come down. So this is what I was talking about. If you're someone who really, 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 really wants to long the market, and you really, really, really want to take advantage of what I believe is going to be at least a 70 to 100 point rally via options. Again, I'm saying if this is your play, if you want to play options, being long, so being by the open side on SPY is going to be smarter than being short, sell to open options on SPY, because this IV percentile is now under 50%. IV is cheap. Volatility is cheap on the market, so those options become cheaper. And when volatility increases, you benefit because you'll make more money on that volatility increase. So with that in mind, like I said, if we pull back, if we go sideways, that is where you can strike, whether it is a call debit spread or whether it is a directional call. Those would be my two favorite ways to tackle that, because a call debit spread would give you the advantage of capitalizing on that extra IV and also limiting your downside. And a regular call would give you the same exposure on the IV side of things. That is better than a put credit spread, because a put credit spread benefits off of the decay of options. If you have low IV, the decay of options is going to not work in your favor, because IV more than likely will expand, and consequently, it will make it harder for you to profit in theory, because options premiums should increase even if you are out the money theoretically on a put credit spread. So put debit spreads and directional calls, just regular buy to open calls, that's what you should keep your radar on with this IV percentile at 45. Now, as time goes on, and if we drop to, again, I'm 613, that old all-time high, 613.23. If we get back down there, we kind of float around there, and we see this IV percentile drop to 20 or 10, like it gets super low, that is load the boat on leaps. Your leaps are going to be super, super cheap. Obviously, depending on how far out the money you are, because obviously when you go more out the money, and you can look right here, this is your implied volatility column. Well, we're on 0 days, but let's go to January. And let's scroll down. Here's your calls. Your IV drops the further you go out the money, because you have more extrinsic value and less intrinsic value. So as you scroll, you see right down here, like the 740 calls, for example, are 13% versus the relatively at the money leaps are 17%. So when you're buying these further leaps, and as you go lower and lower, or further out the money, theoretically, you're seeing the IV go up and up and up and up, or I'm sorry, down and down and down and down. As you move closer to the money, that IV should increase. So that's basically free extra money in your pocket. So you want to keep an eye on that, because that's going to be where the opportunity is going to lie, because you're going to double up on your IV increase, as well as moving closer to the money, getting more of that intrinsic value on those names or on those options, because there's a higher probability of them closing in the money and actually having value. So be mindful of that, especially if you're doing call debit spread. You can play around with here and find out what is the best way to structure that trade. And if I end up opening that trade on a stream, or one of those trades on the stream, I will show you guys, I'll walk you through it. But if not, it will definitely be in our community over at Exclusive Trading. Links are in my bio if you want to check that out. Cheap plug. Check it out. In there, you'll get all of our charts, all of our alerts, all of our everything. Myself, Exclusive, and Grumps, 3 masters of trading, all helping you lower that learning curve. That is our major goal at Exclusive Trading. So if you want to check that out, links are in all my bios. Feel free to come join us and give us a shot. I am more than confident you will not be disappointed. With that being said, the SPY is doing nothing. The Qs are doing basically nothing, and IWM is doing basically nothing. So we're seeing just a lot of sideways price action right now. Not much to report here. Volume's already looking a little sketch, honestly. It's 946, and our volume is, our VMA, so our volume moving average, from the open right now is already 125K. Now, you guys know my rule of thumb for day trading. I like to have 100K per minute or 500K per 5 minute. That kind of just gives me an idea of market participation, if people are trading in general. Now, theoretically, as a price increase, so as SPY gets more expensive, there is less volume to have the same amount of movement, right? Because if you have like $1, right, and you have $10 in your bank account and a stock's trading at $1, you can buy 10 shares, that's 10 volume. But if the stock is $10 and you have $10 in your account, you could buy 1 share, that's 1 volume. So obviously, as the SPY appreciates in value, you can adjust that volume rule that I have, but I still like it for at least over like 80, 90K to know that there's good market participation, good volume. What I'm concerned about is the fact that it's only 9:47, so we're still very early into the day. We haven't really made a trend either which way, and volume's already tapering off. That's not a good sign if you are a day trader today, because as we like to talk about in this program, it's not necessarily bullish or bearish. It's more about risk to reward. Is it a good idea to risk my money today? Is it a bad idea to risk my money? And we're talking about day trading, right? Now, if you're more of an investor or swing trader, you may find this as a good opportunity. But as a day trader, as a short-term trader, unless you're trading individual names with good volume, we're just talking about the general market right now. This could be indicative of a lower volume day on the market in general. So that's something you want to definitely keep on the forefront of your radar as we get into the rest of the day here. There we go. My VIX finally updated. So we're sitting at 1762 on the VIX. Tiny gap up. But from there, we just kind of grinded sideways. And that's supported by, I was going to say it was supported by UVXY, but UVXY rallied back to the top here. Now, again, I like to keep an eye on UVXY and the VIX, because the VIX is going to watch your spot VIX. Obviously, UVXY tends to get a little bit longer term exposure. So, I think it's 30 or 60 days, something like that, 45 days, something like that, where UVXY has a little bit extra exposure because they roll the contracts like that. So I like to watch both of them because it kind of gives me an idea of super short term, which obviously is your spot VIX, and then a little bit, tiny bit longer term or medium term with UVXY. So that's kind of why I keep an eye on both of them. And as of right now, you kind of got a double top on UVXY, starting to come back down. You want to keep an eye on this VVIX. So as long as this VVIX stays elevated, there's a good chance that we're going to see volatility push to the downside, mainly due to the fact that when VVIX is higher, it is the volatility of volatility. So as we gapped up today on volatility, VVIX also gapped up. So that's indicative of letting us know that volatility should reverse course at some point, because volatility is just being more volatile, right? I know it sounds really redundant, but it makes sense. So volatility is more volatile. So if volatility is more volatile, and if volatility is sitting at the highs, then there's a higher probability of it coming back down, right? So what you want to see if you're a bull is see your VVIX at least stay minorly elevated like it is now, then see UVXY and VIX sell off to the downside, so come back down, and then VVIX kind of trot down with it. So if you see VVIX come down, VIX and UVXY all come down, that's going to give you a good sign of a volatility crush on the day. More than likely that we just see volatility slide to the downside, which again, not a one-to-one relationship. The SPY does not have a one-to-one relationship with volatility, but typically when volatility goes down, the market tends to go up. Typically, right? We got to pick my words here very, very carefully. That way, no one takes a say, "Oh, you said this." No, tends to. Nvidia here, not doing much. Apple, total rejection. 4 points off the high. Big rejection on Apple. Not great. Not a candle you want to see on the daily. Bulls are going to have to step in on Apple today to kind of rescue this one. You're on the 200 MA on the 1 minute here. So if the bulls were to step in, and like I said, I do like the daily chart on Apple now. I don't hate it, and I actually might take a call here. because I'm limiting my downside here. I'm just basically limiting it to probably pre-market low. It is a hard sell though. So I'm thinking about it. They would be weekly calls. How did the 215s move today? Let's take a peek at the 215s. Yeah, I think we're going to grab some of the 215s. All right, I got some of the 215s on Apple at 168. Sorry, I'm just typing that out as an alert in our Discord. So I'll keep that on watch for us while we go about our day. There we go. Hold on, let's put it there. There we go, at the top of the watch list here, and then we'll drag up Apple too. We'll keep an eye on it. So basically, if you want to keep it real super simple on Apple here, again, you guys know I love my 200 MA. It's a very simple line everyone's got on the chart. On the daily, it tends to be a decent support. We have these 2 wicks down here, so we're showing price came down and pushed up higher. Price came down and pushed up higher again as when I made my entry. So now we're looking at this area to hold as a support. I would use basically the low of these 2 candles. So 213.04 to 213.09 is like your trigger point. That point is going to be an area of resistance, but if it breaks with volume, you're going to have a hard reversal to the upside. Keep in mind as well, around that area, we also have the red SAR here, currently at 213.14. So those 3 areas right there makes it a very volatile trigger point that if that does break, we should see a hard push on Apple. My first take profit I'd look at is this POC right here at 213.42. And then I'd look at the high, more than likely, of this candle here at 213.90. And then ride it from there. So we'll keep a tight eye on this one. Again, I got in on the 215 calls on Apple at $1.68. So we'll see where this goes. Hopefully I can get some risk-free and ride them for the week. That'd be pretty cool. Especially, so, like I said, I think there's a good chance we fill this gap. And once you get up here, it's going to be a decent resistance. So it won't be clean, like it won't be hard, but you do have a decent move here, a decent opportunity on the daily this week to get up to 221 at least. So it's a good opportunity if I can get a nice like 30-40% here and then kind of put runners on, let it be. That would be ideal. You're seeing a nice little wall here at 213 even on the level 2, about 6,000 shares parked there. That red SAR coming down. We'll keep an eye on this as now I have an open position on Apple, and then we'll kind of go from there. We will do our week ahead segment. So again, if you want to hang out for that, the week ahead segment basically goes over all the catalysts for the week. It kind of looks at the daily chart on the overall markets, which we kind of already did, but we'll do it again a little bit more in depth. It gives you an idea of what I'm looking for the week and maybe what to watch out for in terms of both catalysts, news catalysts, and in terms of technical levels. So levels to keep an eye out for. So we're going to do that in a little bit here. I just want to watch Apple and see if the bulls can protect that 200 MA down here and break my trigger level of, again, that we'll call it 213.14 because that would be aiming for the highest point, but that between 213.14 and between 213 and 213.14 is a decent little area of resistance there, but breaking that level should launch us here to the upside pretty decent. You got your MACD slowly starting to turn around here as well, and we're respecting the 200 MA still. Volume's okay. It's not awful. It's not fantastic, but it's pretty okay. As soon as we see an engulfing candle here, I think we're going to get a nice little push here. The 5-minute, you also have that tweezer bottom. So a tweezer bottom is when you see both, like you see 2 longer wicks. So you see a red candle typically with leaving a wick behind, and then you see a green candle leaving a wick behind. At least that's what I look for in a tweezer bottom. But essentially respecting, showing levels that price went down there and came back up, at least in this case twice. And that's where you're seeing a potential reversal in a lot of names because of the fact that price has pushed above that point, right? It's swept down there, but bears couldn't close it there, so it tends to push higher. That's what I'd be looking for on Apple. Now, I gave you guys my levels to watch out for on Apple here because if this does move hard, I know there's a little bit of delay, whether you're on X, YouTube, or Instagram. So you know what I'm looking for here. So please don't wait around to take profit or do whatever you want. You make your own trade decisions. I just let you know what I'm doing, and you can make your own decisions that fit your trade style. But again, look at that 213.14 as your trigger point. I'd look at 213.42, the localized POC, as a first place to take profit, potentially, depending on volatility and everything. And then I'd look at the high of basically this candle, 213.90 as your second point to potentially take profit. Nice little push here. We're testing my trigger 213.14 exactly. And we're trying to push through right now. Those contracts currently going for 179. Nice little move here. It's about 7% on Apple. So watch again that POC. That's going to be my first point that I'll be looking to take profit there. That way you're aware. Sorry if you hear me click-clacking. I'm typing in our in our Discord as well. Don't love that candle. So we need to see some follow-through here. So when I say we break a trigger level, you're seeing a little bit of indecisiveness. You know what a doji candle is? When you leave a wick, on the top and the bottom, you leave basically like a flat line in the center. That's indicative of indecisiveness. So the market's going, we don't know if we really want to go to the upside or the downside yet. In this scenario, breaking the trigger on the first go probably isn't going to happen because you're letting a trend kind of build here. And you have all of these EMAs and MAs tightly underneath it. So coming down and back testing these actually wouldn't be the worst thing before getting a stronger push in general, which is probably what we're going to see here. What would be bad is if we had a thick candle to break that 200 MA, and that would be a cut point for me. So at this point, green on those contracts, but there is a chance that this trend reversal here could push us lower, could break that 200 MA. And basically if those lows break, that's going to be my cut point. So decent risk to reward here in general. Really shouldn't be risking more than like 10, 15 bucks realistically to the downside. So I like it. I think it's balanced risk here. And these are the kind of trades I like. And if you've watched the program, you know I like to find the ones that are, whether it's day trading or swing trading, I like to find the names that are beaten to the dirt, or if they've got a downtrend and they kind of show like they're building a support before they take off. Similar with UPS, which, Dad, if you're watching, I'm right on UPS, and I will continue to be right on UPS because my dad said that UPS was a dog when I got in at around like $95, and now it's trading at 103, and we already hit my first take profit level at 105. So I'm right, and I will continue to be right, Dad. Back to Apple. Let's watch this POC level for a break here. The POI, so it's your premium of interest, you want to see break on those contracts, is around 180 to 182. Once you get over that 182 area, you may see some buyers flood in, so watch your volume as well. All right, we're getting it there. We're right at 102, 182. Here's your POC. Need a little bit more of a push here. If we reject here, then I'm going to slap a stop on it. So in the next 1 minute candle, I want to see follow through here. If we don't see follow through in the next 1 minute candle, I'm going to put a stop on it. And that way my risk is completely balanced. So either way, I either make money or I don't lose anything. And that's what I want to see. Come on, break it here. We're right at that point. You can literally see this green dotted line on my chart. That is your POC. That is the most volume traded on the day. You know what I'll do? I will take a trim here. That way I can at least realize some profit. That's a 7% gain. It's nothing too fancy, but we'll take a little trim here. That way I can say I made money. It's oh, I'm gonna drop the meme in the chat. It's the honest work meme. It ain't much, but it's honest work. It's honest work. It ain't much. Don't like that rejection at all. I'm happy I took a little profit there. Don't like that, but in the bull's defense here, that argument, you are making a higher low for now. So now if I want to really, really, really limit my downside risk here, if we break this low, which is 212.79, then I'm going to cut. So now I've moved up my stop, at least mentally in this case. Or if we break 212.79, the low of this candle, then I'm out. Because we were making consistent higher lows, we're going higher and higher and higher and higher. That's indicative of a reversal here. But if we break that higher low, then I want to get out. Because there's a good or a better chance that we would push to the downside here. And again, these are for Friday, so you got plenty of time on these. But I'm just giving you guys the micro analysis on what's happening right now on Apple, looking just at the 1 minute chart, which a lot of people give me and others a hard time for looking at the 1 minute chart for some reason, but I think if you're a day trader and you're not looking at the 1 minute chart, it's a little foolish. But I also would say if you're looking at the 1 minute chart, you want to take a lot of things with a grain of salt. It gives you more information. So looking at the 5 minute chart, you may feel a little less stressed out. It's a little less volatile. But if you're able to control your emotions and delineate the information given to you on the 1 minute chart, then it's not that bad. All right, we're at 175 on this contract. It is tight here. It is tight, tight, tight. If we don't move in the next 1 or 2 minutes, then I got to put a stop on immediately. If you're in a smaller account, I'd recommend, or I wouldn't recommend, you do whatever you want. I would suggest you consider a stop loss. All right, I'm going to close these out here in basically break even. Well, that wasn't anything fancy, but we're following our game plan here. We actually, as I close those out, we broke that 212.79 level. And like I said, those contracts are right around my entry here. I think I got out at what I get out at? It was like 167, I think. So I lost a penny on the exit, but still made 7%. So overall, made money there. Now this is risky. Now you've got a green star here. You made a new low, localized low here. If that 200 breaks, you could see another downside sweep. I'd look to reestablish a potential long if we see the lows defended, but I wouldn't want to touch it right now with this green star potential break in the 200. The green star is going to cause bearishness. The 200 is going to be some level of support. It's iffy. Your MACD is flipped over to the downside, right? So that's bearish, short-term bearish at least. If you sweep sub 212.50, it could go lower. So I don't want to be long now. I may get back long. I may look to re-enter long. But you're in a dangerous, dangerous spot here on Apple where I don't really want exposure either which way. Because I could see an argument for the bulls and there's an argument for the bears. It's a pretty clear argument here. Like I said, if that 212.50-ish area breaks, it's going to pull lower, which will not be good for the bulls. If it defends, basically the low of the day, 212.47, if that defends, then I might get back in. But I want to be de-risk. I don't want exposure right now because this is looking very, very, very tight here. Bulls are trying to reverse it here. Let's check out the market real quick, get an idea. Yeah, you had a little bit of a hard sell there on the SPY. Made a new low there. Let's check the Qs. Dirty double bottom. It's not necessarily double bottom, but pretty close. IWM actually had a nice little rally. So we're seeing some strength come through the small cap names. VIX coming down a little bit. Okay, so this is what we talked about earlier. Not really. I was going to say we see VIX coming down a little bit. We're seeing VVIX slowly come down, but UVXY is actually pushing up. So there's a little bit of a discrepancy with volatility. Our short-term volatility is trying to push lower, and our, again, mid-term volatility is actually holding near the highs, while VVIX is, well, now it's moving back up. I was going to say trying to push down, but now moving back up. I think I'm going to get long Apple again. It's iffy. It is iffy. Looking at those 215s again. It's basically back to my entry. That 168 entry. I hate, if this daily candle closes like this, I would hate to be along on that daily candle close on Apple. I might just back test basically 212.82. Then I can get long again. So keep an eye on Apple. I'm looking at the 215s again on Apple. We'll keep an eye on it and go from there. Okay, here's the back test I wanted. Right here. I don't love the 5 minute though either. Not doing it. I decided, no, I'm done. I'm too indecisive on it, and I don't like that 5 minute chart. I'm not doing it. We're not touching it. That's it. No more. Not looking at it. C'est la vie. Go back in the gutter. No. I'll find a better name to trade later. See, that's easy too, guys. That's you just walk away sometimes. That's actually one of the things I like. Like, as you saw with the first trade, I go, good risk to reward here. Let's take it. Bang. Made a small gain. It was 7% because I was like, might be a little iffy here. So let's take some profit. Took some profit. And then went, if it breaks this level, we're going to close out. Closed out. Then as I continued to look at the chart, I went, this kind of sucks. Let's not, I don't care if it's bullish or bearish. It's iffy. And especially as an options trader, I don't want to be trading on iffy. If I'm day trading, I don't want to be trading on, it could go either way, right? I don't like that. Unless I'm exposed for could go either way, like with a strangle, right? Like I said, I just don't want exposure to this either which way. I'm not going to say I'm bullish or bearish here. It's too indecisive for me. And the 5-minute honestly looks more bearish. But again, if the bulls defend that 212.50 area, then they'll probably get a rally at some point today. But the flip side is if it breaks that 212.50, it's going to get a doom candle. It's going down big time. So it's not really a win-win scenario, because also especially with options, if I was to put a stop loss on a bigger move, I could get really messed up, because especially if you're doing a market fill, let's say it just drops straight through my stop level and my broker market fills, we're talking about could be a 10-20 cent difference, and on contracts that's a lot of money. So I don't want that risk. I'm confident in a bigger move either which way, but I don't really want the risk on a strangle either. $5 on a strangle, which means my break even would have to be sub 210 or north of 220 on the week. It's not worth it. So wouldn't touch it. All right, guys. I want to do my week ahead segment. But I'll ask you guys, would you rather, and let me know in the chat, specifically if you're on YouTube. And by the way, if you haven't been on YouTube, pop over there real quick and drop a subscribe if you haven't. Once we get to 500 subscribers, we're going to be doing this every single day. So if you want to see the show, if you like the show, if you want to hear about it every single day, or at least at your leisure, drop a subscription over on YouTube. That's the goal that we're looking to hit. But with that being said, let me know in the chat, would you guys prefer that we did the week ahead segment, or would you like me to look for another trade? How about a swing trade? So I'll let you guys know. I'll let you guys vote. One in the chat if you would like me to do the week ahead segment. We'll look at the catalyst for the week. We'll look at chart for the week. The only reason I'm setting it up like this is because we already kind of talked about it, but maybe some of you came in late. So if you want to be prepared for the week, put a 1 in the chat. Put a 2 in the chat if you want me to look for a potential swing opportunity, or at least pull up a name that I recently opened a swing on that you might be interested in. You can't vote for both. So would you rather be prepared short term, or would you rather be interested in a potential opportunity longer term? I think I know the answer, because everyone wants to get rich tomorrow, but let me know in the chat. A 1 if you want to do the week ahead segment, a 2 if you want to shift course here, and I'll share a swing opportunity with you. So let me know in the chat. Vote, comment. Tom says 2, Beastwood says 1. So we got 1 for 1 here. 1 for 1. 1 if you want to do the week ahead, 2 if you want me to share a swing play. If we get a tie, I'm going to do both, but they're both going to be shorter. So you'll have to pull what you can out of that. Hatchet did a 2. So we got 2 for a swing trade, 1 for the week ahead. I'll give you guys 1 more minute because I know there's a delay. So we'll give everyone an opportunity here. 1 more minute. Let me know what you think. Bueller. Dead Money says 2. All right, so sorry, Beastwood. Looks like you got bullied out of your position. Looks like you got bullied out of the week ahead segment. I will leave you with this. I'll run through the catalyst real quick. That way you at least have that. You know what to look for, or at least highlight what is on the docket for now, because I can always change every single day. But at least highlight that. That way you guys have that, and then we'll look at a swing opportunity. A little compromise there, so that way there's a little bit of something for everyone, but we'll focus more time on the swing opportunity. Okay, so like I said, this week, today, just have Trump signing executive orders at 4. Other than that, not anything really to worry about today from a catalyst perspective. Looking forward to tomorrow. You do have consumer credit at 3 p.m. that more than likely will affect the market. So make sure you keep that, jot that down in a little notebook or whatever. Just be aware of that. Looking forward to Wednesday. Now, I believe this changed. Someone can fact check me on this or let me know in the chat, guys. That was the original tariff deadline. Now, someone can please fact check me. I'm like 90% sure Trump said that he's extended it as of this morning. So please fact check me and I'll announce that to everyone. I just don't want to waste time looking it up, but I'm pretty sure that got extended. But if it's not, the tariff deadline is this Wednesday. But again, someone will fact check me and I'll blurt it out to all of you. That way we know. Looking ahead through the rest of Wednesday there, wholesale inventories, and you have mortgage applications that morning. So if you're long like retail, if you're long real estate, that's something you might want to keep an eye on. So watch that. And you do have the 10-year note on Wednesday. Now, because it's the 10-year, simple way to look at it with bonds or notes, the longer the term, the higher probability of it actually affecting the market, because it's going to give us a better insight on how and if rates are changing, right? Versus the smaller bills. They don't matter as much. But the longer term bills, you want to keep an eye on that. You also have your FOMC meeting minutes on Wednesday. For some reason, people on social media really love to talk about it, and I don't get it. I think every single time we've had an FOMC minutes, nothing has happened, and they just regurgitate what Powell said. So I guess there could be a risk factor there if something is mentioned during the meeting that we don't already know about, but I would not be very worried about that. But I mean, maybe just be aware of it. Going forward from there, looking at Thursday, you got jobless claims in the morning. Obviously, keep an eye on that. That's at 8:30. And then you also have the 30-year later on the day at 1 o'clock. That is like the big one you want to keep an eye on. That one tends to get a good push on the market, depending on if it seems to be expected or not. But you tend to get like a good dollar pop either which way in the market, depending on where we're sitting. That could be very important on the day. So obviously, keep an eye on that 30-year on Thursday at 1, and then some Fed speakers at the end of the day. And lastly, Friday doesn't look like we have too much of anything, at least nothing really yet. The federal budget balance maybe at 2, but outside of that, not much. So really, all in all, a pretty quiet week. Knock on wood. My desk is wood. We're going to knock on it. Looking like a quiet week, at least an anticipated quiet week. Hopefully that stays like that. It's looking like we're going to have a pretty chill week, which tends to mean that TA falls a little bit closer, which makes my job easier, so I like that. That's good. I like when there's no crazy amount of news or anything, because it makes it a lot easier to do my job and make money. So, looking like we'll have that. Okay, now, let me share a swing name with you guys. Hold on, let me pull one up from my portfolio. Let me find a name. So now I have the challenge of two things. I want to find a name that I'm long on already that still hasn't moved. So selflessly, something you may want to consider. So a name I'm long on already that still hasn't moved, and there's still upside opportunity on it. So give me a second. We're going to look through my portfolio real quick and get an idea. I think that one's moved too much. Okay, I'll give you guys, I'll do two names. All right, I'll give you guys a name that I've been super bullish on in general. How about I give you guys an investor name, and I give you guys a swing, like a short-term, medium-term, whatever swing. So if you're an investor, I really love Kronos Group. CRON. This is a stock that I have been adding now for a long time, basically since I don't even know, 2022 even. And I've been dollar cost averaging, maybe 23. It was something around I think I started my position around 260-ish. And I've been adding forever, essentially, on this name. This is a weed company. So, obviously, if you don't like that sector, whatever, it's not for you. But This company actually has a decent chunk of the market share, in my opinion, undervalued for what they control right now. It's still an $800 million company. So it's big, but not too small. You see a lot of these weed names that are like too small, and so they're extra risky because of how small they are. The market cap's smaller, and some are a little too big, where the legalization risk may not be worth it for you. This, based on what I know about the company, their financials, and their size in general, is the sweet spot. A good size, still a small company, but a good size company that has good products, has good market share, and has distribution. And even in the past, where I have to double check on this because things might have changed, but they had an agreement with Coors to make a weed-infused beverage, which obviously it's not legalized in the States. It's legalized per state, but it's not legalized federally. Any of these weed names, if there's a sniff of federal legalization, which you've seen in the past, they pop off hard, right? Keep in mind, this stock at its highs, and this is back where weed was a really hot thing back in like 2018, 2017, got all the way up to $25. It has come down 90% since then. The lows on the stock is at $1.60, currently trading $2.06. And looking at the daily, actually, I added more to my long, I believe Thursday or Wednesday, breaking the 200 MA here on the daily with your MACD flip on high volume. Really indicative of near-term price action shifting more bullish. This is a name where if you're an investor and you're interested in having some weed exposure, I believe this company, based off of what they have to offer, what brands they offer to the market, their current market share, and their other business dealings, right? Partnerships. This is a very interesting company. I think at this value as well, if there is federal legalization eventually, right? And again, keep in mind, this is going to not appreciate much very quickly until it's federally legalized in the States. This is a Canadian company. They can sell weed there, right? And they could sell across in Israel and other places, Germany, whatever. This company, I'm very confident, will be bought out when federal legalization takes place. Because companies like Altria, Philip Morris, whatever that British one is that sells cigarettes, they're going to want to acquire these weed companies because they already have distribution. They already have all their factories to grow and process. And they're going to have to pivot to make these products. All these cigarette companies must get into marijuana the second it is legalized. And there's going to be no easier way than by purchasing this company for $800 million, because realistically, to build all those factories, to build the infrastructure, to build the networks, to build all this, it's essentially a brand new business. It's going to take a lot of time and a lot of money. And probably, at least this cost or this evaluation, cost a lot more than $800 million. So, this company doesn't have the best finances, the best, in general, the best finances, right? It is still a struggling company because of the fact that they can only reach certain markets. But because of its size and because of the agreements it's had in the past, I think if you are to invest in a weed company, Cron, C-R-O-N, is the name you should consider. Mainly due to the fact of, again, their network they have, sorry if that was really loud. The network they have, the agreements they already have in place or have had in the past, so there's obviously still some tentacles there, the current evaluation, and the market cap. These are all things to consider in your investing, when you invest in a long company. And I think Cron is in a very, very special place, and it's been in a special place. Anything under, in my opinion, anything under $3 on this name will continue to be a steal. Long term. But, again, there is some risk because it is a weed company. You have to be okay with that risk. If that's not something you want exposure to, then obviously you don't want to invest in this name. With that being said, it is a name I'm very, very bullish on long term. This is an investment. This is where this eventually appreciates over that $25 value eventually, and you get to realize long-term capital gains tax instead of short-term capital gains tax on the tons and tons of shares that you bought at $2, and you look like a big genius when you go on social media and be like, I bought all my shares at $2. That is the kind of value that you could have with Cron if you're patient. Not to mention selling options. I was trading this name back when it was, I was trading it back here during the wheat hype. I was trading options on this name. And when it got up here, it got crazy. So you may have a very, very happy time if you accumulate shares and able to sell calls eventually. You might have a lot of fun with this name. So something, if you're patient, to consider checking out for sure. Okay, that was the longer term one. Real quick, I want to pop back to Apple. And I'm happy I followed my gut. We didn't really get a knife down through the 212.50 area, but I followed my gut. We closed out. Smart move. And those 215s are now worth $1.33. Good job. Pat on the back. Let's keep it going. Now I got to debate. So you guys want a shorter term swing. Do we want a more technical short term swing? I have a name I really, really like that'll give you pretty tight risk to reward, and it hasn't taken off yet. To full transparency, I'm up only 3% on this name. On equity. We'll do that one. I like this one. It's kind of a snail. Hold on, let me see. I'm debating which name to share. All right, in the chat, let me know. Would you rather me share a potential swing trade? Both are going to be decent setups. Would you rather me share a name that most people don't know about, or a name that some people are familiar with? 1, if you want me to share a name that most people know about. 2, if you want me to share a name that people may not have heard of. So 1, if you want familiar. 2, if you want unfamiliar. All right, unfamiliar, not familiar, not familiar. 1, if you want familiar. 2, if you want not familiar. Let me know in the chat. Because I'm debating between 2, and 1 is a bit of a snail. A lot of people don't know of, but it's a really good technical setup. The other one, people know about, and some people know about. I'm pretty bullish on, and they're both solid setups, to be honest with you. But both are at the point where they haven't really taken off yet. Like, you could get in on either one, really, if you really wanted to. So let me know in the chat, and if no one types anything, I'm just going to pick. Bueller. Last call. I'm going to wait another minute because I know I got a little bit of a lag, especially on the YouTube side of things. So I'll wait while I'm waiting. Take a peek at the market. Man, I'm really happy I didn't trade SPY today. This is just abysmal. Nothing really happening. Q's pretty flat. IWM had a nice rally and selling off a little bit. VIX flat. VVIX moved up, actually, which makes sense with UVXY coming down. Nvidia flat. Microsoft arguably flat. Google a little bearish but trying to build a base. Apple, we already talked about. Amazon green on the day, leading the pack. And Tesla got a little bit of a recovery there, a little bit of relief off the 288 lows, all the way up to 296. Almost a 10-point rally on Tesla off the lows. That's pretty solid. Hatchet says the one with the most clear technicals. Okay. Hold on. Let's see. All right. Tom also wants the familiar name. All right. So we'll share with you guys the familiar name. This name might be the one you've heard of. Actually, I don't want to share that one. Let's do this one. Well, you said familiar name. So we'll do Soundhound. S-O-U-N, Soundhound. This is a name that I've been watching very, very, very closely. This is a name that over the 10 level is very bullish. You know, I'm in a good mood. We'll do both. I want to do both. We're just going to do both. We'll do it live. Anyway, over the 10 level is a very good name. Specifically, over 10 and over 1020, that 200 MA, really solid pick here. Now, you got this LOI here at 1094. I'm predicting that we kind of float here for another day or two. Not too much, but this weekly is ready to pop. I'm very, very bullish on Soundhound here. Breaking this 1190 area is going to push you into this gap all the way. Hold on, let me go back here. Breaking this 1190, well, technically that's where the gap originally started. We had a failed gap fill on the 514, but breaking this 1190 is going to push you for the gap fill here. You know, you do have a short little pit stop there at 1371, but that'll push you all the way to 1399. So right now you're talking about, what is that? 1399 divided by 1094. At least a 28% gain on equity just on the gap fill. Mind you, the next price target I have, 1597. Then you have another gap up at 17. So you're talking almost a 70% gain on this name, which I believe will happen very soon. To the point that I actually added to my long last week, and I added leaps last week as well. The technology that this company has, I believe, is really undervalued, and the fact that we had such an insane rally on high volume, we cooled off on lower volume, and again, this is the weekly chart, so over a decent amount of time, and now we're building a base, consolidating, and we finally broke that 10. That is a big psychological level, and a level in which we are above all of our EMAs and MAs on the daily, on the weekly, and on the weekly, you've got your MACD curling up with my favorite RSI number. Technically, it's 54, but once RSI tends to tip over 54, because I use RSI not as an overbought, oversold indicator, I use it as a momentum indicator. Over 54 is the point in time where I look for strong bullish momentum to start. Right when you breach over 54 is when we tend to see stronger momentum take place, and you get that RSI moving up, moving up, moving up. So that's indicative, at least to me, that we're going to see the bulls start to push here in the near term on the weekly. Looking at the daily here, it's a similar story where the RSI is already at 59. So you already see short-term bull momentum, which it may even taper lower today if we consolidate around this 1094 the next 2-3 days and really push for a hard rally here. This daily candle is actually really solid because we wicked down and we're trying to push over the 1094 today, which closing over that would be fantastic. But even looking at the monthly here, not as bullish, right? But on the month here, we had, again, that hard push, that hard sell back down, arguably actually a hard sell on lower volume, and now we're starting to really push here. Like, it just needs a little bit of juice over this 1190. Once you push for that gap fill over that 1190, you're going to see volume flood in on this name. I'm very certain of it, and I'm very certain we're going to see retail FOMO into this name. And you're hearing about it, and you probably heard about it. This is where a lot of people got bored in general and just got out of their position. You could also argue here on the daily that you have an inverse head and shoulders and another kind of cup and handley kind of look, depending on how you look at your patterns, right? As long as this holds north of 10, I think you have a very good short-term swing, mid-term swing. I opened leaps as well. If you're an investor, this is a good name longer term. I think this company is going to get bought out with their technology they have. Currently, it's at a $4 billion valuation. So even back at all-time highs, it's only at an $8 billion valuation. I say only because these tech companies tend to get bought out for a lot more than that, right? This is the kind of company that has a lot of data and they have a really solid product that a bigger fish, like an NVIDIA, huge fish, but any bigger fish will look at this and go, yeah, we could do what they're doing, but also I don't feel like it. And we've got $10 billion over here, or $20 billion, whatever. We'll just buy them. That's the kind of thing you see where we talked about it earlier, that especially with Kronos Group, that companies just get like, I could do this, but I could also just buy it and then we could get to market quicker. Because remember, getting to market first is what matters. And that's how you make the most money, right? That speed is important, and AI, or I'm sure to say the speed behind AI is the most important. It is an arms race right now, and having a company like this in your portfolio, I'm very confident on that you have multiple factors working for you. You have a strong company, strongish, right? They've got a decent product. They have a lot of information. They have a clean technical setup, and I'm pretty confident they're going to get bought out, or there's at least a buyout opportunity here. So with all of those things in mind, I really, really love SoundHound AI at this specific price level. Anything north of 10, I think is still a solid trade, a solid investment. Once you get under 10, maybe be a little bit more trepidatious, but north of 9, basically like this low here, 930, I don't even think it's going to go back there. I really don't. If it can sustain over 10, this was a really strong break. We saw a lot of flow go in. We have a lot of volume here. Again, looking at the weekly, how the weekly looks, how the daily looks, there's a lot of signs pointing up on this name. And if there's a break of that 1190, and if there's a rally, you're going to see people flood into this name. You're going to see high volume. You're going to see everyone tweet about it. Everyone's going to get all excited. You're going to see rumors start to fly, and you're going to be the one who's already in at a lower level, and you're going to be one selling your shares to these people running in. So that's my 2 cents on SoundHound. I think SoundHound is in a great position. Now, I will share with you the other name that I like, and this is a boring one, TEX, Terex Corp. They do, what is it? Machine waste recycling solutions. It's a boring name. But look at this daily chart here. You had a basically a it was a double top to a triple top really as of 7-1 with a slight little, I mean technically it's not a triple top or a double top, but you had a little baby decline, but you were forming essentially a flat top breakout where you made not necessarily higher lows, but you at least defended the range here. You stayed north of the 200 MA overall. You had a hard break, and now you're starting to back test that. You're letting the 8 EMA catch up on the daily. Your MACD starting to flip in with an RSI of 62. I think this is primed for a decent push to the upside. You have strong momentum here on the weekly where, yes, your MACD is super green. It can get greener, though, especially with your RSI at 59. I'm looking for, conservatively, to get into this low, like 52-ish range. So here, we'll zoom it out here a little bit. Basically, this cluster here is where I'm looking for some area of resistance or some profit taking anywhere between 51.88. You got a baby gap in here, 52.30 to 52.46. Another level here, 52.65, and finally 53.59. Getting above that gives you a decent hard push to about 56.60. I do have a P&L thing on here. It's 17% gain, roughly. If you got in around, I got in, my entries at 48.23. I have a few more shares a little bit lower on a separate account, but 48.23 is where I got in prior to this little pop here. So it would be paying a little bit more than I did, but if we back test that 8 EMA, that could be a prime spot. If this is more of a trader, so like a swing kind of trade. I'd be a little careful on the option side of things. You're not too liquid. So this would be a better trade to do with shares. You can even just look at your OI here. Around the money, there's not a lot of activity. So I would look at this as more of an equity trade. But even on equity, getting up to 70% on one of these boring names when the market could get a little bit of a pullback or whatever. You have an insane inverse head and shoulder here on the weekly as well. It wouldn't shock me for this to get all the way up to that 57.95 and then even get all the way back to highs eventually if you're patient. So I like equity more with this name for multiple reasons. But this is a really solid setup here on the weekly, on the daily, if you're more of a technical trader. All right, guys, so those 3 names again, because I guess I did 3. Kronos Group, CRON, SoundHound, SOUN, and TEX, Terex Corp. SoundHound is definitely going to be your more quicker mover. That's going to be more of your mid to short term kind of trade. TEX and Kronos is definitely a longer term trade. That's an investment. TEX, I'm looking at like midterm, under 6 months kind of thing. Probably under 3 months realistically. But yeah, those are the 3 names I would like to share with you all. So hopefully you found some value in that. What time is it? Oh, it's 10:30. So we'll get to wrapping things up here. Let's just take a quick look at the market before we wrap for the day. Yeah, guys, I wouldn't be a hero today. Nothing wrong with sitting on the sidelines today. I mean, you saw me scratch and claw for 7% on Apple. It wasn't anything to write home about. Nvidia's pretty flat. Microsoft's trying. Ooh, Google's selling here. Yeah, Apple's not really getting out of the dodge here. Amazon's pretty flat. If you're a day trader, Tesla, mainly due to the volatility, you can make some money there. Your IV's probably going to be high. Let's see. IV percentile is 62, so it's actually not awful. Obviously, these are expensive, so just keep that in mind. But yeah, I think that's going to wrap it for today. Perhaps be cautious. We're SPY sitting at the lows as we're wrapping the program here. Volatility moving up a little bit. This is so odd. So, as I say, volatility moving up, VVIX is actually moving down while UVXY is pushing up. And the market's going down. So that actually can be indicative of volatility trying to now expand. So flipping the narrative from earlier. Because, hey, this stuff is live, so things change. We got to change on the fly with it. it's looking like, or at least leaning in the direction of volatility now being more comfortable going to the upside, because we're seeing UVXY go up and VVIX come down, which is saying volatility is going to be less volatile. So as volatility becomes less volatile, you could form a trend in either which way. Also, though, I will debate myself and say your VIX can just go sideways while your VVIX trends lower, because moving sideways is still lower volatility than popping around either which way. So just keep that in the back of your mind. I would look at individual names today if you are going to trade. Look at names with momentum. Look at names with volume. I would stay away from the market if you're going to trade, unless you're hitting like the lows or the highs and you're trying to scalp. We don't have any news or anything really to look out for today that could really affect the market either which way. So unless there is some like a tweet or some random news event, I wouldn't really look to be a hero on the market today in general. But no need to fear, because we have 2 more shows this week. I got another show for you guys tomorrow and another show on Wednesday, both at 9:15. Before I take off here, guys, do me a quick favor if you haven't already. Drop a quick like on the stream, a subscription over on YouTube, a follow on X, a follow on Instagram, wherever you are. Interact any which way if you appreciate the program, if you value the information here. I greatly appreciate your feedback, your commentary, your interaction, because that helps me grow in this world of algorithms and other competition and whatnot. So I appreciate it very, very, very much. And again, I only ask you twice a stream. I try not to be annoying about it. But if you find value in this, please subscribe and interact in any which way you can. And don't forget, once we get to 500 subscribers on YouTube, I will do this every single day, for the most part, most days. Pretty much all 5 days a week. So if you haven't already, pop over to my YouTube, make sure you subscribe there. That way you don't miss any more live shows or anything at all. And with that being said, guys, some say you may need an edge to trade. Well, I like to look at things from a different angle, and that is what you'll always get right here on the Atomcash angle. Have a great rest of your day, and remember, precision beats prediction every damn time. See you tomorrow at 9:15.
The time has passed, and that's a wrap. You're on